Good morning and happy Monday, all you wonderful melon heads out there. I hope you are well. Today is May 22nd, 2023. Top story this morning. We've got PacWest Bancorp. You may recall them. They were one of the banks that was having all kinds of trouble earlier this month and then back in March after Silicon Valley Bank had failed. A lot of people considered PacWest would be one of the next dominoes to fall. They actually sold a portfolio of 74 commercial real estate loans today. Now, that portfolio had a face value of $2.6 billion. They loaned out $2.6 billion, but they sold the IOUs, they sold that loan for $2.4 billion, which, if my numbers are right, if my calculations are correct, PacWest Bank lost $200 million on that deal. This is how rising interest rates destroys money. When the price of the loan When the price goes down, the interest rates go up. When the interest rates go up, the price goes down. And so the Fed's interest rate hikes have destroyed $200 million worth of value in the form of these loans. And of course, PacWest has to make this sale. They need liquidity. They're desperate for money anywhere they can get it in order to meet withdrawals, which even though you don't hear anything about it these days, the bank run isn't making headlines anymore. It's still going on, folks. It's entered a new phase. It's much slower, but we've got a couple of charts we're going to show that the money continues to drain from America's banks. Where's it going? Money market funds. This is no longer about insured versus uninsured deposits. It's not even really about unrealized losses from bonds and from treasuries and loans. People are just chasing yield. There's more interest to be gained in a money market than there is sitting in a checking or a savings account. So people are taking their money out of the bank. Elsewhere, we've got the Fed has lined up the usual cast of characters. We've got Neil Kashkari making statements yesterday. We got James Bullard making statements today. We've got a whole bunch of other Fed governors. We've seen this before. This is called jawboning, where the Fed sends out their officials and they all make speeches one after another. And the goal is to move markets with words rather than policy. If the Fed sees that the market is going too far in one direction, or Jerome Powell gives a speech and the market reacts one way, maybe he doesn't like the way the market react, they'll march out Kashkari and Bullard and all these other guys, and they will just jawbone markets in the other direction. So get ready for a whole bunch of that, because these guys are all slated to go out and make some kind of speech somewhere or another this morning. And elsewhere, we've got President Biden is in Asia right now, and he was talking yesterday about how he expected a thaw in U.S.-China relations and how he thinks we can get back to being multilateral and we're all going to play nice and everything's going to be fine. And of course, last night, China says, cool story, bro. We're banning Micron chips from any use in China. So apparently China does not share that sentiment about thawing relations with the U.S., although keep in mind this is largely considered in retaliation for some previous bans that the U.S. put in place on things like Huawei chips. So with that, we are going to shrink my big melon of a head, and let's see what's going on in markets this morning. S&P is up an entire 3.9 points at 4,195. We got the Dow Jones is down 17 points, 0.05% at 33,409. And the NASDAQ is up 13 points or 0.11% at 12,671. So stocks are kind of flat this morning. No big movement one way or another. Looking at the U.S. dollar, it's been bouncing up and down a little bit this morning. Currently up 3 basis points at 103.23. Still above that 103 handle as the dollar continues its march upward that it's been in since really about the end of March. Looking over at bond yields this morning, we've got yields are up almost across the board right now. The 1-month Treasury is yielding 5.58, up 7.5 basis points this morning. The 10-year yield is the low point on the yield curve, folks. The 10-year is at 3.69, up only a half of 1 basis point or 0.13% right now. Currently yielding 3.69. And looking over in the commodity space right now, gold is down $6 this morning at 1,974. Silver's at 23.96, down about a dime. And WTI crude is unchanged for the day at 71.67. And natural gas, which has had a pretty good run lately, not so much this morning, down 4% or about 10 cents at $2.59. And here is the main story. PacWest has sell $2.6 billion of real estate loans at a discount. And I think this is the part that the market is missing. The market sees PacWest Bank to sell, and they're like, oh, good, stock go up. Yay. And they're like, keep reading, bud. They're selling it at a discount, which means they are losing money Losing money, bad. Stock market, just want you to know. Lose money, bad. Make money, good. In case any of you guys aren't really taking the walk, I realize this is 2020, so nothing makes sense anymore, but losing money is bad, okay? PacWest Bancorp, one of the regional U.S. lenders that was engulfed in turmoil earlier this month, said it agreed to sell a $2.6 billion portfolio of 74 real estate construction loans as part of its plan to shore up liquidity. Shore up liquidity. The bank needs cash. They don't have cash to meet withdrawals, so they need to sell assets. What assets are they selling? They're selling their loans, these commercial real estate construction loans. But with higher interest rates means these loans are not worth as much, so they're selling a $2.6 billion loan portfolio for $2.4 billion. Kennedy Wilson Holdings, Inc. will buy the loans at a discounted price of about $2.4 billion, the company said in a statement on Monday. Now, the buyer will also assume all future funding obligations of about $2.7 billion. So apparently these loans had either future drawing rights or some kind of credit lines attached to them. So there was potentially another $2.7 billion of lending attached to these. So that may be why the market is reacting so positively to this, that PacWest doesn't have to potentially meet that $2.7 billion of future lending requirements. Now that's on to Kennedy Wilson. Beverly Hills-based PacWest will also sell 6 more loans to Kennedy Wilson for about $363 million if it wins certain approvals, it said on its filing on Monday. The transaction is expected to close in tranches during the second quarter and early part of the third quarter this year, and the loans carry floating rates. Yikes, this is garbage debt, with an average of 8.4%. Good God, I bet you PacWest is happy to have this stuff off its balance sheet. And looking this morning, PacWest stock, the market is loving it, currently up 6.5%. It was up as high as 10.5% a few minutes ago, so it's coming down off of those highs. But right now, the market really likes this deal. But I want to keep this in context, folks. Look at a one-year chart of the stock here. This stock was trading at $31.44 a year ago, currently trading at $6.08. All right, so the coast is not all clear for PacWest Bank. Now, just want to remind you guys, the bank run, it is not over. That's an important thing. The bank run is not over. Check this out right now. This chart, this is money market funds in the United States. And who posted this one? Let me send a shout out to Game of Trades posted this chart. Thank you, Game of Trades on Twitter. This is cash flowing into money market funds. Why? Because you can get 5.5% interest in a money market fund right now. Why would you leave your money in a checking account earning less than 1% when you can go to a money market account, get the same protections, the same insurance, and yield 5, maybe 5.5%? And you can see really all year, this chart here has been moving up, up, up. This goes all the way back to 2007. But what you can see here is the chart has gone vertical in these last few months. Currently, $5.3 trillion in money market accounts. And where's the money market? Where's this money coming from? It's coming from deposits at commercial banks. Now, this is going back to about October of 2020. And you can see here, it started right around April, March of 2022, right as the rate hike started, right as the Fed started raising interest rates. The first rate hike was in March of 2022. You can see that deposits in U.S. commercial banks have been in decline. And then here we go in March with the failure of Silicon Valley Bank. We had this big step change down in deposits, but it hasn't ended, folks. You've seen all these headlines of Janet Yellen saying deposit outflows have stabilized and America's banks are now on sound footing, and all these wishy-washy statements and all this reassuring everybody that all is well. Well, look at since Silicon Valley Bank failed, this decline continues. It's still happening. Money is still leaving commercial banks and it's still flowing into money market funds. Well, U.S. banks need to sell assets in order to meet those withdrawals, and that's why PacWest is selling these real estate loans and taking a $200 million loss when they do it. Again, everybody's so optimistic. The stock is going up this morning. People are glossing over the fact that they lost almost 10% on this deal. They need to make up that 10%. They still owe the money to their depositors. Their liabilities are unchanged. Their assets just went down and they lost $200 million. So this is still going on, folks. The bank run is not over. It's happening slower now, but it is still happening. There is net outflows of deposits from America's commercial banks. Okay, we're going to move on from this one. We're not going to talk about the debt ceiling today. For the love of God, here we go. Fed's cash carry says a June rate pause or hike is a close call. Some officials are signaling support for a pause at June 13th and 14th meeting. Policymakers have said they will wait to assess the hike's effects. I have to warn you, do not gaze directly into Neil Kashkari's eyes. I'm told he could turn a man to stone. Federal Reserve Bank of Minneapolis President Neil Kashkari said it's a close call for him if the central bank should raise interest rates next month or pause while it monitors the outlook for inflation. I think right now it's a close call either way versus raising another time or in June or in skipping. What's important to me is not signaling that we're done, Kashkari said on Monday in an interview with CNBC. So Kashkari is taking, there's a little bit of dovey, there's a little bit of hawkish in this statement, right? It's a close call. So they're saying a rate hike is not carved in stone. The market doesn't agree. The market is saying no rate hike right now. The market disagrees with Kashkari. But what he's saying here is even if we skip in June, let's not get the wrong idea here, folks. We could skip a rate hike in June, but maybe we hike in July instead. Just give it a little bit more time. The lagging indicator, we're worried about what our hikes to date may have already done. So we're just going to slow down. That doesn't necessarily mean an end. So Kashkari's kind of playing this one a little loose. He's not really giving away too much, but he's saying maybe pause in June, maybe hike in July. Now, just a few minutes ago, this is Gavin on Twitter is putting this one out. We had James Bullard came out, and listen to him. Bullard's comments right now. He's saying, James Bullard says, I'm thinking 2 more rate hikes this year. 2 more rate hikes. When right now the market is saying 2 rate cuts for the rest of this year. James Bullard is saying 2 rate hikes. So this is super hawkish. Now remember, Bullard always plays the role of the hawk. That's what he always does. So this is like the upper bound, the most financially tight, the most hawkish you're going to get is going to be from Bullard, and he's not disappointing here. 2 more rate hikes this year when the market is saying 2 cuts. He's also saying we'll have to move rates higher to tame inflation. Markets are ratcheting up expectations for inflation, and he said, this is amazing that anybody could say this with a straight face. U.S. recession probabilities are overstated. Folks, no matter how much economic data we look at, the manufacturing PMIs, the jobless numbers, the commercial real estate numbers, banks failing, crypto companies going up in smoke, for anybody to say that U.S. recession probabilities are overstated right now, how is this man in any position of authority? I don't know, in our financial system. But there it is. No recession and 2 more rate hikes, apparently. Okie dokie. So expect a whole bunch of that today because looking at the economic calendar, we had Bullard's speech, which is going on right now. We've got Barkin coming up at 10:50 a.m. Also at 10:50 a.m., we've got Bostic. And at 11:05 a.m., we've got Mary Daly, who somehow still has a job, even though Mary Daly oversees the San Francisco Fed, which, let's see, in her district, Silicon Valley Bank, yep, they're gone. First Republic Bank, they're gone. Moonstone Bank, anybody remember that one? That was Sam Bankman-Fried's little shed in Farmington, Washington, that Mary Daly signed the letter welcoming them into the Federal Reserve System. Yeah, Mary Daly. Fine job you're doing over there at the San Francisco Fed. Please keep up the excellent work. So we've got speeches from all of these guys today. I'm sure we're going to get wacko sound bites from every single one of them. This is jawboning. This is when the Fed tries to move markets without changing policy. They just try to do it with words. And the last one I got for you guys today, China bars Micron chips in escalation of U.S. tech clash. Joe Biden says he expects China relations to improve soon. Apparently not too soon because the company says it's assessing its next steps and will engage in talks. China delivered the latest salvo in an escalating semiconductor war with the U.S., announcing that Micron technology products have failed to pass a cybersecurity review in the country. In a statement Sunday, Beijing warned operators of a key infrastructure against buying the company's goods, saying it found relatively serious cybersecurity risks in Micron products sold in the country. The components caused significant security risks to our critical information infrastructure supply chain, which would affect national security, according to a statement from the Cyberspace Administration of China, or CAC. The results come more than a month after China announced an investigation of imports from America's largest memory chip maker. So another shot fired in the trade war between the U.S. and China. And again, this comes right as President Biden says, I think things with China are set to improve. Well, not so much. Micron stock right now is down just under 4% at 65.50 this morning. So there we go. That's what we got going on today. And I just want to say thank you very much to Jose Orozco. Says post-Yellen voice refreshment. Cheers, Jack. Thank you, sir, very much. I appreciate it. I got my post-Yellen refreshment here as well. Yeah, Janet Yellen she never disappoints. Let's put it that way. She's always got an entertaining comment to make. And, I'm sure the next time a bank fails, she's going to come out and reassure us once again that our banking system is strong and resilient. And this is the last bank to fail. I swear we won't have another crisis in my lifetime. Well, how's that working out for you, Aunt Janet? Thank you very much, Jose Orozco. I appreciate the super chat, sir. You are a gentleman and a scholar. And thank you, Getting Younger Every Day, says, Happy Monday, Jack. Great content as always. Still my favorite financial feed every morning. Well, I appreciate that, Getting Younger Every Day. Thank you very much for that. I appreciate the super chat, sir, and the kind words. And thank you for your time spent here with us every morning. All right, guys, that's all I got for you this morning. I want to thank you very much for watching. Thank you to all my Patreon supporters for everything you guys do for the channel. Link down below should you feel so inclined. And hi, Mom. Hi, Dad. I love you guys. Till next time, live small and dream big.